Hello everyone, today is Friday, August 21st, 2020. My name is Evan and welcome back to another market recap video. If you're new to these videos, welcome. It is nice to have you here. We break them up into two parts. Our first part, we're going to walk through everything that went on in markets this week. We're going to look at performance, sectors, internals, volatility, and pick apart everything that happened, everything that stands out and is interesting. And then in part two of this video, we're going to jump into the charts. We're going to look at the longer term trends and kind of make sense of everything and put the information from part one into those bigger trends. So hopefully that sounds good. Let's jump right into it with the headlines from this week, or some of the happenings from this week. So the big story was new S&P 500 all-time highs. I believe that happened on Tuesday. We pulled back a little bit and then we ended up closing the week strong. So we set new all-time highs in the S&P 500, but it was really the Nasdaq show that was continuing to march higher here. We had some doubt with the Nasdaq in the first part of August, and it is back strong, closing strongly, outperforming. We'll talk about that in just a minute. And with those two bullish developments there, so with an S&P that's closing at highs, with the Nasdaq that's running away, we do have breadth that is notably weakening. And I'm not going to say it is negative, because I think we still have positive market breadth here, but it's essentially slowing. It's not as enthusiastic, if you will, as some of the price moves that we're seeing out there in stocks. So we'll talk about that in a little bit as well. So let's jump into the performance. The last column here is the 1 week performance. We can see it was a mixed picture. The S&P and the Nasdaq were both green. The Russell 2000 was red. The Dow, which I say every week I need to add to this chart, I just need to remember to do it, was down just slightly. And world stocks, so ACWX, which is minus the US, was down just slightly as well. But notice the clear outperformance here, and look at the spread between Russell 2000 and Nasdaq. So almost 5% difference depending on which of those you were holding this week or trading. You absolutely had a very different outcome. So mega cap, growth, tech, momentum is sort of back at it and leading the charge. In terms of market internals, we have sort of a split picture here. If we're looking at just the middle row, which is the AD line summed up on a day-by-day basis, you can see that we actually had negative 2,700 kind of cumulative decliners throughout the course of this week. And what this basically means is because we saw that equity markets were positive here in the S&P and the Nasdaq, and that's essentially what you're seeing is breadth and leadership narrowing, and you're getting the mega caps that are really leading to the upside, and then the majority of the individual stocks, the smaller cap companies, are actually just not keeping pace with the Apples, the Microsofts, the Googles, and the Amazons, and now the Teslas. So that's sort of what's happening here. We can see we still got a pretty healthy number of 304 net 52-week highs on the week. That number is down a little bit. So if you recall a couple of weeks ago on those up moves, we were getting 400s, high 400s. So you can see even the number of stocks hitting 52-week highs is slowing down just a little bit, but still clearly positive. In terms of sector performance, technology, top of the stack here, followed by consumer discretionary and communication services. And on the downside, we saw energy, financials, utilities, all underperforming. Energy down 5.6%, financials down almost 3.5%, utilities down 1.6%. So a pretty split picture here. We essentially had 5 sectors down, and we had 6 sectors positive here. So a pretty split week in terms of performance. Now, volatility didn't really change so much, and volatility hasn't changed a whole lot in terms of the term structure. We've essentially seen, nearly identical kind of graphs here, values here for volatility, and this is S&P denoted by the VIX, and then the 3-month and the 6-month and the 1 year respectively. So 3 months, 6 month, 1 year. But basically, it hasn't been changing a whole lot over the past couple of weeks. We've kind of firmed up here. We found some, I don't want to call it support, but comfort around the lower 20s in the VIX. That seems to be where the market is finding some complacency here. In terms of credit markets, we did get a bounce back this week. So if you recall, last week we saw, fairly, I would call it aggressive sell-offs in LQD and JNK. They did rebound this week, so it didn't, hasn't really made a full convincing kind of trend move to the downside. We'll look at it in just a little bit, but a bounce back here is net good, I believe, here for our outlook in a general sense. In terms of interest rates, commodities, you can see yields falling this week. So we essentially saw bond prices rallying this week, which was good again because we did see, well, I guess it's good depending on your positioning, but we did see the sort of inverse. We saw TLT saw that aggressive sell-off last week. And getting some rebound there. Gold and silver not doing a whole lot, seem to be range bound now, and WTI crude oil via USO sold off just a little bit. So the report card on the week, kind of overwhelmingly here is still positive. It's an A- by our report card standards. The market breadth was on the cusp of almost being a net negative, but there is still enough positive there for market breadth that we don't have a clear enough divergence yet, and it's not sort of, it's not something that's a strike against the outlook right now. It is something we're paying attention to. It is notably slowing on a relative basis, but still outperforming or still positive in terms of our outlook. Our Merlin trading strategy, so we usually end with this in terms of exposure here. You can see is really layered into the market now. There's basically no cash left. It is effectively fully invested, and you just have to remember when you're looking at this, the time frame here and the way this moves and adjusts is going to be probably a little bit different than if you're a short-term active trader. This is probably not the most reliable in terms of direction for you. So I always tend to get some questions that come in about, well, does that mean do you think next week's going to be higher because you're fully invested, or those types of questions, and it's tough to sort of glean from that. The best thing I could suggest is going to our website and just reading up about the strategy. We have lots of information. We post performance on it every single month, so there's lots of ways to understand kind of how it operates and just the time frame it operates on. But effectively here you can see it is pretty much picked up a lot of tech exposure over the past few weeks here, and it's basically dominated by biotech, healthcare, and technology outright for the most part. A little bit of financials in there as well. So that's it. That is how we're positioned. That's the first part here. So we'll be back in just a moment with part two. All right, we've got TC2000 open. We've got our equity market grid showing. So that gives us the S&P in the top left, Nasdaq top right, Russell 2000 bottom left. And then in the bottom right is ACWX, which is our international minus the United States look at markets. Now we also have our custom smart trend filter applied to all of these charts. Those are the green, yellow, and red dots. They measure trend and strength of trend based on price and volume. And the white dashed lines is price itself, and we're looking at a weekly time frame. So holistically here, when we just look at all of these markets, we have basically the same outlook here we've had for the past few months. We are still in a buy signal. We are still in a bullish state here for our outlook on all of these markets. That hasn't changed since May for, I think, all of these markets. Looks like maybe April. Yeah, it's still just May. It looks like it was almost June here for ACWX. But we've basically been in a buy signal, bullish outlook. Prices should head higher in all of these states on the weekly time frame, and nothing has changed. So we've gotten a little extended in some of these markets. Once again, Nasdaq, you can see pulling pretty far away from our trend. S&P, same thing. So in the short term, it could speak to some mean reversion or some pause in the action, but the outlook here is still very constructive on the long-term time frame. If we go down to a daily chart for all of these markets here, we've got a little bit of turbulence or some potential change going on here in the bottom grid. So if we look here at the Russell 2000, notice here this has been bullish again for the majority of the past month or so on the daily chart. You can see we're starting to creep back down into our trend level, and it is being tested right now. It's not bearish. Yellow basically just means let's pay a little bit of a closer attention here. Let's look at some of the cross currents that are going on. Maybe you want to go down to a smaller time frame and just manage risk accordingly. ACWX here, same thing. On Thursday went back down to yellow neutral outlook. So as we like to say, we typically prefer to use the prior state. It is still kind of bullish until proven otherwise, but both of those are getting a little bit of change. Nasdaq, S&P 500, still the same bullish outlook here for both of these markets. So let's drill down to price action. That gives us a clean picture of trends. I always like to start there because that just, the quick outlook of where we think prices are or what our bias is right now is easily shown with those trend filters. And now we get a little more granular. We look a little closer at price action with our candlestick charts. And we can see here with the S&P 500, we have rallied to new all-time closing highs. Basically, you can see the S&P has sort of been taking its time up here. It basically got up to these prior highs about 6 days ago, or 9 trading sessions ago, or I guess 8 trading sessions ago is when it basically jumped up into this level. And it's basically just been meandering sort of sideways, creating some doubt, creating some uncertainty, sort of that classic sideways choppy price action until, I guess Tuesday it finally got the close over to new closing highs, pulled back on Wednesday, recovered Thursday, followed through Friday. So we are essentially trying to make headway here to the upside in the S&P 500, and that basically means that there is no overhead supply for the S&P 500. There's no resistance above us anymore. As long as price can hold up here, then there's clear skies above. What we don't want to see at this point, or what changes sort of the information, the outlook, is if we see some type of sudden rejection here of this level, of these new highs. We got a slight, kind of concerning day here on Wednesday, but notice there was no follow through, and it wasn't large enough to sort of, really kind of break trend and, resolve lower. And so buyers basically stepped right in again and supported this market higher. So what would change for us would be, if we just got basically a high volume rejection, reversal, and really a breakdown of, call it, 33.58. If we essentially took out the opening print or the lows here on Thursday of Thursday's price action, then that that would probably be concern enough in the short term to signal some type of changing in market environment. But until and if that happens, I think you need to respect the trend here. We need to respect the fact that even though we are getting long in the tooth, to say the least, in some of these markets, the path of least resistance still remains higher. And I've said it the past few videos, the toughest trade right now continues to be to stay on the long side. It continues to be to sort of sit on your hands and stick with the uptrend, as scary and as uncertain as it may be. It is what continues to pay right now and reward the patient bulls. That will change. That will change at some point. The idea here is that it is uniquely difficult to spot the exact day of that change ahead of time. So inevitably, I will, always at least get one, feedback comment saying, this is the high or this is the top, or, how could you, still stay on the long side? And, eventually that person or the timing there will be right. And, they will get to say, I told you so. But basically, every time in these past videos where we say, well, the trend is still higher, so that's where we got to stay with. Everyone that's been calling the top in the past is either lost money or is still fighting this market. and it just remains difficult. So that is what, kind of the outlook there. We take it day by day, and if we start to get that rejection, we'll start to adjust accordingly. But trends are up, price action is supportive, and that's sort of the outlook there for the S&P 500. If we look at the Russell 2000, this has been, a little more concerning. It's certainly underperformed this week. And, if we take a step back here and just look at the price action, again, we've got longer term trends that are all heading higher. We broke out above this level here, 153. This was, again, where we topped out in early June. The Russell pulled back after topping out. It went sideways for almost 2 months before taking another attempt and breaking out above this level. And now we're simply kind of coming back and retesting this breakout zone. So for me, if I look here at the Russell 2000, I'd say that this is a pretty good spot for the bulls to defend. It looks like in very early tests, we got a little bit of a bounce off of the lows here on Friday. But if the Russell 2000 can successfully hold above 153, then this could prove as a great pullback opportunity, and you might be able to get some rotation into Russell 2000 here, and the uptrend and the rotation game sort of continues. I'm not saying that has to happen, but that's certainly the most bullish, optimistic scenario here for the Russell 2000. If we start, again, closing more violently and breaking back below this June pivot here, that would start to change the tune, the analysis, and the outlook in the short term, and then give us a little more reason for concern. For now, I still look at this as a fairly constructive pullback, frankly, in the context of an uptrend. Nasdaq 100, of course, sort of back to its old recovery ways here, back to its leadership status, back to, kind of really trying to pull the market up and continue to advance. It is getting, quite extended here again in the short term. But this is what this has done basically for the past 4 or 5 months, is it continues to, stretch and be overbought and stay overbought, and then it cools off and goes sideways a little bit, and some rotation happens, and then the trend, kind of picks itself back up. So for me, the Qs here looking great again. They basically are trading back at all-time highs. They're holding above this more accelerated trend that I think we could probably point our hands to. If you're looking for some change of character here, I'd say a breakdown of this more immediate term trend. So at this point would be around 275. That would change the outlook. That would change sort of the positioning here in my book. So that is the outlook broadly here for all of the markets. Let's get back to our trend filters here and look at some of the other markets. If we look here on a weekly basis, not a whole lot going on. Let's go to a daily chart for some of these markets. So again, we saw LQD go bearish here last week. Remember, we had the pretty violent sell-off, and it is bouncing back this week, so it's going to be important to see how this resolves itself. But right now, this is in a difficult spot. JNK, kind of the same thing here, printing a bearish trend on Friday. So we got to be careful here on both of the credit markets. If those start to raise some flags, then maybe we do get a more meaningful pullback in the market. But let's pay kind of a close attention there. VIX still on kind of a bearish trend here, more of a neutral signal in the short term, but it's been bearish to neutral, which basically means lower here for VIX. TLT did produce a sell signal for us last week as well. It is bouncing back here on the daily chart. Remember, the weekly chart is still kind of bullish and neutral. So it basically, the way I sort of look at this is you got some cross currents here, and depending on the time frame you're looking at, it essentially speaks to me that there's probably just going to be some increased volatility and ultimately opportunity for traders in the near term here for TLT. If we go to gold next, gold, silver, both still positive trend on the weekly chart. USO printed its first bullish weekly trend reading here for the first time basically all year. So that's pretty interesting that USO is finally getting a buy signal. Commodity's been in a buy signal. On a daily chart for gold, I think this is actually pretty interesting here too, printing a sell signal for gold, which is the first time now since so we had one print of a sell signal here in gold back in the 8th of June. But essentially, it's been positive and neutral this whole way up. You had one kind of false signal right in here, a little whipsaw going on. But really, if you back that out, we've been in a buy signal for gold for effectively 4 or 5 months, and you're starting to get a little bit of a transition right now. So I think this is interesting. I think it's something to pay attention to. Again, the weekly chart is still, fairly, wildly bullish in terms of, the positioning there. So again, time frame certainly matters here. We'll talk about gold and silver in just a little bit in terms of the price action. If we go to sector grid, we take a look at some of the sectors here. On a weekly time frame, this is a pretty strong group right across the board. Basically, everything's in a buy signal on the weekly chart except for IBB and XLE. They are both neutral, so they're not bearish, but they are both neutral, and everything else here is bullish. On the daily chart, though, we do have some transitions happening this week, and I do want to talk about a bunch of them. So energy, financials, biotech, utilities, those all went into sell mode or sell signal here on the daily chart in each of those respective sectors. So let's pull up the candlestick charts. Let's look a little closer at some of this. Let's kick it off with XLE. So energy sector now. You can see it's basically been down 5 days in a row, and essentially, over the past 8 days, even more so, down about 10%. It ran right into this zone of resistance here. We talked about this, in fact, when it was getting up here, it being a sort of a critical spot for XLE, and it essentially failed right at that area, and it's starting to roll back over. So there is a lot of supply that has traded in this band now for the past 4 or 5 months. So since end of April, we've got a lot of trading in between 35 and call it 39. We had a brief attempt to the upside, but if this starts to convincingly roll over below 35, then XLE is certainly going to be in a troubled spot. So let's keep an eye on this. It hasn't happened yet. It's kind of oversold in the short term back towards support, so wouldn't be surprised to see a short-term bounce, but we'll see how strong that bounce is. But sort of in the penalty box in the short term. Financials, kind of the same thing. We talked about this on Tuesday as the fact that they started to transition lower, and they basically just continued lower. They stayed heavy for the rest of the week. They've been down, let's see, out of the past 7 trading sessions, they've been down 6 of the past 7 trading sessions. So, shorting them now is probably not the best idea in the very short term. Everybody's going to come to that decision on their own. But down 7 out of the past, or 6 out of the 7, or 7 out of the past 8 days, whatever that was, speaks to some short-term oversold readings. But, longer term, I think, this 2375 area right in here, this is a pretty interesting shelf of support that I'd want to see XLF stay above. If it starts losing this area, then I think it's in trouble. IBB, this continues to just stubbornly stay pretty weak here. We've talked about the monthly chart here, or just the long-term outlook here for IBB, as this has essentially gone sideways for 5-6 years. Again, this isn't total return data. This is unadjusted for that, so do keep that in mind. But it tried to essentially break out to new all-time highs here in the past 2 months or so, and you get a bit of an outside reversal, and we're starting to pull back. So I think it's a pretty high stakes level for IBB to keep that momentum intact. I'd say 130 to 135. This was sort of the sweet spot to see it kind of come back down to and test. It's certainly taking its time. Just take a look at the past 1 month worth of trading here, and we've got basically 5 up days out of the past month. So it's certainly been sold into, and be interesting to see if this is just working off the strong move it had in the first half of the year, or if this is going to be a more meaningful sort of rollover back into this old range. Still have some hopes here, maybe biased because we do have a decent amount of exposure in this particular sector. But I'd say, if it starts really, losing ground and accelerating below the lower 130s, then it's going to be some trouble there for IBB. XLU. So XLU, let's see if I can get that up. So XLU sort of rolling over a little bit. To me, it just speaks to a market that, really this is getting picked up on our trend filter mostly because it just spent so much time in this range that it's starting to roll back over. You still have just really a broader consolidation going on here. So it really depends on how closely you want to watch this. You can make a good case here that this is still just sideways since April and there's no change. But if you're trying to play the near-term direction, then you're getting some sell signals there as it starts to roll over. So I'll leave it at that. I don't have too much else to say. I do want to speak to the Dow because the Dow Jones I think actually looks pretty interesting here. Looks pretty bullish. Again, kind of the fact that it really took the lead. Remember in the first half of August we saw the nice rotation into Dow, and then it just really had this nice orderly sort of down to very gradual sideways consolidation, and it really does look like it's sort of flagging out here and could start to just rip to the upside again next week. Maybe technology takes a break. Dow gets some rotation. That'd be pretty healthy, but I really like the setup here in the Dow coming off of a base, flagging out high and tight. This looks basically as good as it gets from a technical perspective. And GLD here, I did want to mention this because I do think like this is probably just a sideways type of market here in the near term. It kind of broke its immediate trend and it's seeing an uptick in volatility. So I wouldn't be surprised to see, even maybe another undercut of this, maybe one leg lower down into the mid 170s, but mostly sideways here. Silver's kind of the same thing where just would expect, some consolidation to take place here in some of these metals after such huge moves to the upside. So a little bit long on this recap, but there was lots to talk about. Hopefully you guys enjoyed the video. Hopefully you've had a good week of trading. As always, I appreciate everyone tuning in and listening, watching, and viewing these videos. If you like them, you can subscribe to our YouTube channel or follow us at The Trade Risk. Have yourself a great weekend, and we'll see you back here next week.